Hi, I'm David Johnson with ACM Partners. Today I'll be talking to you about capital raising in the middle market. In the last few years, we've seen a number of changes in the economy and in the broader capital markets. For the sake of this conversation, we're mostly talking about debt capital. The recovery from the 2008-2009 recession was the weakest on record in the post-World War II era for the US economy. And a noteworthy twist in the typical recovery pattern has been that lenders and other capital providers recovered before the broader economy. At the same time, the shift in the US economy from an industrial focus to a knowledge-based focus has challenged many lenders, as knowledge-based companies are increasingly capital efficient. They do not require the same level of investment in working capital, in fixed assets. Industrial companies are relatively easier to lend to. They have considerable cash costs. They need to fund working capital. They need to fund fixed capital assets. They generally have very heavy CapEx requirements. Also, lenders are finding a severe disconnect in terms of the collateral that they are comfortable lending on and the collateral that most knowledge-based companies have. As a result of these changes in the US economy, lenders across the risk spectrum are aggressively hunting for opportunities to deploy capital. We are currently in nearly a feast situation for any company above 20 million in sales that is looking to raise capital. It is no longer the case that the capital provider universe stops at bank lenders. And it is most important to understand the full ecosystem to align their messaging and their expectations on capital availability and cost of capital with where they sit and how lenders of different types will view them. The days in which the best loan possible could be negotiated on a golf course are long since over. Lenders across the risk spectrum are now interested in different types of lending to different types of companies. It could easily be the case that a $40 million company could optimally have 3 different lenders for 3 different loan facilities. There are 3 key elements to the capital raise process. The best, most disciplined processes generally take between 90 and 120 days, although more complicated transactions have been known to take longer.